Okay, so let's get right into it. There's been a massive shift in how Social Security taxes work. It's a brand new reality, really, and it's probably not what you think. So we're going to break down exactly how this powerful new approach actually works. So the big question on everyone's mind, is the federal tax on your Social Security benefits really gone? Well, for most retirees, the answer is effectively yes. But it's not because they just repealed the old law. No, they did something a lot more clever. And we're going to unpack what that new reality means for your wallet. So how is this all happening? It's thanks to a new law called the One Big Beautiful Bill Act. And at its heart is something they're calling the Senior Bonus Deduction. This is the key. Let's dig into what it is and how it's going to change your tax picture. But before we get to the good stuff, we have to understand the old problem, the system we've been stuck with for 40 years. It all comes down to why you've been paying tax on your Social Security in the first place. For decades, this right here has been the nightmare formula, provisional income. It's how the IRS figures out if they can tax your benefits. You take your income, add some other things, and then you add half of your Social Security benefits back in. It's always felt a little unfair, right? You pay into the system your whole life, and then you get taxed on the payout. Well, this formula is the reason why. And you really have to look at the timeline to see how we got here. When this all started back in '83, they swore it would only hit the wealthiest 10% of seniors. But here's the critical flaw. The income levels they set back in 1984, just 25 grand for a single person, were never, ever adjusted for inflation. So over 40 years, what was a tax on the rich slowly became a stealth tax on the middle class, catching more than half of all seniors in its net. That's the problem this new law is designed to fix. So how does the One Big Beautiful Bill Act tackle this mess? Well, instead of getting bogged down trying to repeal the old tax, it does something much smarter. It introduces a powerful new tool that doesn't erase the old formula. It just makes it totally irrelevant for most people. To really get how big of a deal this is, first let's remember what deductions you already get. If you're over 65, you get the standard deduction, plus an additional one just for being a senior. So for 2025, a single senior was already looking at about $17,750 in deductions. That's our starting point. And this is the game changer. The new law adds another $6,000 deduction for every person who's 65 or older. And get this, if you're married and you're both over 65, you don't split it. You each get it. That's a $12,000 bonus deduction for a married couple. That's huge. So you take what you already had and you stack this new $6,000 bonus right on top. For a single senior, your total deductions suddenly jump to almost $24,000. And for a married couple, we're talking nearly $46,000. And that's the secret right there. They didn't repeal the tax, they just built a deduction shield so big that for most people there's no income left to tax. And this was a big enough deal to get attention from the top. The Social Security Commissioner, Frank Bisignano, called it a historic step forward and said it helps seniors better enjoy the retirement they've earned. Okay, so here are the key facts you've got to remember. This bonus works whether you take the standard deduction or you itemize. It's set for 4 years, from 2025 through 2028. And this is super important. There are income limits. You get the whole thing if your income is under $75,000 for singles or $150,000 for married couples. Go above that, and the bonus starts to phase out. All right, enough with the theory. Let's get our hands dirty and run the numbers for a couple of real-life scenarios. This is where you can really see how this is going to affect your own finances. The big question is, does this mean you will pay zero tax on your Social Security? Let's find out. So let's imagine a single retiree. We'll call her Susan. Her total income is $34,000. Under the old rules, she might have been okay, but now she's got way more breathing room. Her new deductions are over $23,000. That's enough to completely shield her $24,000 of Social Security, leaving just a tiny bit of her 401k withdrawal as taxable. Now let's look at a married couple, John and Mary, with a household income of $78,000. Now, this is where you really see the power. Before this law, a good chunk of their $48,000 in Social Security would have definitely been taxed. But now, with their new deductions soaring to almost $47,000, It's a completely different story. That deduction shield is big enough to effectively wipe out any federal tax on their benefits.
Okay, so this sounds amazing for a lot of people, but let's be real. It's not a magic bullet for everyone. The law was specifically targeted, so let's be crystal clear about who benefits the most and who might not see much of a change.
When you look at the big picture, the impact is massive. For roughly 90% of everyone on Social Security, this new deduction is big enough to completely wipe out any federal tax on their benefits. Gone! But what about that other 10%? Who are they? It really boils down to two groups who aren't going to see their tax bill drop. First, you've got the lowest income retirees. And the reason is simple. They were already paying zero in federal taxes, so no change for them. Then, on the other end, you have higher income retirees. Because their income is above those phase-out levels, they'll get a partial deduction, which is still great, but it won't be enough to completely erase the tax. And this all goes back to the design of the law, right? It was built to provide major relief right in that sweet spot for low and middle income retirees. Once you get above $75,000 for a single person, or $150,000 for a couple, that senior bonus starts to shrink. It was targeted relief. All right, I get it. That was a ton of tax talk. A lot of numbers. You're probably thinking, okay, just boil it down for me. So let's do that. What is the final bottom line takeaway for you? Here's your new tax reality in 4 simple steps. 1, there's a new law with a powerful senior bonus deduction. 2, it's worth $6,000 a person if you're over 65, so $12,000 for a couple. 3, this creates a giant tax shield for your income. And 4, the result, for about 9 out of 10 seniors, this effectively kills the federal tax on your Social Security. Simple as that. And just one last time, let's lock in those key income numbers. To get the full bonus, you've got to be under $75,000 if you're single and under $150,000 if you're married. That's the threshold for the maximum benefit. So the takeaway is pretty clear. For most of you, the federal tax on your Social Security benefits is, for all practical purposes, gone. But, and this is a big but, here's the final thought I want to leave you with. This whole thing is only on the books for 4 years, through 2028. So what happens after that? That's the million-dollar question we're all going to be watching.